Should high-frequency trading be slowed down? We want to ask Irene Aldridge, quantitative portfolio manager at Able Alpha Trading, also Andrew Stoltman, securities lawyer and partner at Stoltman Law Offices. Andrew, I'll begin with you. What do you think are the problems here, and should something be done about it when it comes to this kind of trading?
I don't think there's any question that something has to be done. The hot traders, the flash traders, whatever you want to call them, high-frequency traders, really pose a systemic risk to the United States and to retail investors. I mean, we saw the 1,000-point drop on May 6th. We still don't know the reasons why it happened, and I've been calling for a ban on that sort of trading. There's no redeeming quality when you have people trading in milliseconds or microseconds. Ban it. It poses too big of a risk.
Yes, but Irene, I've heard the argument that, in fact, the market actually, in this case, worked. I mean, prices went down drastically. No one, of course, is entirely sure why, but then they, almost as quickly as they went down, went up. What do you think needs to be done, and would you agree with that to a certain extent that the market did actually work?
Oh, absolutely. I'm a strong advocate of high-frequency trading. And by the way, it's a pleasure to be here, of course. And I think what we're seeing here is people's resistance to new technology. And ironically, we've seen time and time again, and we just forget about this. For example, in 1892, we're talking about 1892, thousands of Americans petitioned the U.S. Congress to ban trading in futures. In futures, that's something that we see today every single day, and nobody would think of banning futures today. But in 1892, it was blamed on speculative and useless speculative. It was deemed useless speculative activity that was riling prices in commodities and hurting ordinary investors. This is happening time and time again. I think if anything should be done in terms of high-frequency trading, we should be required, or to require brokers to maintain a log of all transactions. So when something like May 6th happens, that there's actually a way to reassemble the order flow.
Andrew, you're shaking your head.
Yeah, there is absolutely, positively no redeeming value in these high-frequency traders. There's none. What are we supposed to wait for? The market to crash 20% in a day, 30% in a day? It doesn't add anything. These guys are the barnacles and the leeches of these securities
prevent that from happening again? Would high-frequency trading prevent that from happening again? Would banning it?
Banning it, absolutely. If you prevent trading in milliseconds and microseconds and say, you know what, no more,
but is that necessarily the cause of the flash crash? And we still don't fully understand why that happened, right?
Yeah, I completely disagree. First of all, if you ban the high-frequency trading in equities, the trading is going to only intensify in foreign exchange, and which is not regulated. And you can't regulate it because otherwise you're interfering with monetary policy. So the bottom line is, with foreign exchange, you can create what's called synthetic equities. So let's say you ban trading in equities, it's all going to be reflected in foreign exchange in no time.
Look,
let me propose something to you guys, and this is something that some of my sources at the SEC have been talking about, and it's getting some kind of system together where you actually can track all of these trades. In other words, right now, maybe they're tracked at the New York Stock Exchange, at the NASDAQ, but it's a whole other system over at the CME, etc. And so there's no real actual sort of accountability, no one system that you can go to. Irene, do you think it would work if there was some kind of paper trail so that you knew where every trade was?
Absolutely. I think this is the way to go. In fact, the Futures Industry Association has put together a big proposal about how to better manage these situations, and basically to enhance the electronic paper trading, to create a new sort of communication standard that would communicate the risks of each trader to the exchange, to the trading venue, and also to keep an extensive log that would enable us to actually...
It's difficult, though. Yeah, it's difficult.
Of course it's difficult, but it's not impossible.
But it's a Band-Aid.
I was going to say, Andrew, I mean, Irene made a really good point earlier when, she was saying that we've had so many technological advancements in trading that maybe, the regulators and the rules just can't keep up with it. Do you think there is a situation whereby that's never going to happen? They're never going to be ahead of the curve when it comes to the technological advancements?
Well, I think the one thing we do agree on is that the SEC is always chasing after the bad guys and the problems, and they are not in the front on a lot of these issues. So I agree.
So behind the curve.
Yeah, the trading does pose a, the technology poses a risk. But just because the technology poses a risk doesn't mean we can just put a Band-Aid on it and say, let's track this stuff.
Let me ask Irene, what would it look like, a world where there was no high-frequency trading?
Sure. Well, first of all, I would like to say that the SEC is doing a phenomenal job. Contrary to the public opinion, they're staffed with extremely qualified people. We're talking about serious PhD talent there, and so they know what's going on. if there were no high-frequency trading, you would see huge bid-ask spreads, number one. In many cases, you would not be able to liquidate your positions. If you want to sell something, you would not be able to find somebody to trade on the other end, simply because this is the way the markets used to be, and we're basically going back to the time where there was no high-frequency trading.
Quick final word, Andrew. We've got to wrap this.
Yeah, look, high-frequency trading has mushroomed in the last 10 years. None of these problems proliferated in the previous 70 years. So it's a little doom and gloom, a little fear, but you got to get rid of it.
1962, the article over the weekend, exactly the same flash crash.
All righty, guys. Thank you. We're going to leave it there.